What's going on? Chow, Dave, Bandit. You guys had decent days today. Quite the turnaround. John, Elliot, Eddie. What's happening, everybody? What's up, Ben? Other Eddie, Ricky. How's it going, Pam? Cool. All right, let's jump in. Today is Tuesday, May 23rd. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is basically the same. I kept a little bit of a feeler in JP Morgan overnight that I got back into on the pullback. Stock charts, stock markets. All right, how did we close today? Not great. SPY's down 1%, S&P down about 1.1%. Qs here down at about 1.25% or so, and the IWM is down 0.3%. So not too bad from the IWM, but it's a gross looking daily candle that the Russell gave us today. So let's take a look at it. So the big question to ask ourselves today is, and we can look at our indices and try to make an informed decision about it, is today a failed breakout now? Is that what we're looking at? Are we looking at a failed breakout? Or is just a technical price correction of the up move that is slightly uncomfortable with the degree of how much we're pulling back? I could certainly see arguments on both sides of it, and I think it also depends which index you're looking at, because the Qs look different from the SPYs, which look really different from the IWM. What I said this morning in the morning meeting, we were still a little bit elevated from that daily ADMA, but through the last couple of days of choppier sideways price action, is NVIDIA out yet? Through the last couple of days of sideways price action, the ADMA was slowly catching up, but there was certainly room for us to pull back. But I said in a pullback, my kind of line in the sand for momentum bulls is a close below. Thanks, Ben. That's right. I thought, that random headline. A close below the low of May 18th here, which is really the day that we broke out. So it's one thing, if we closed a little bit beneath 4,200 in the SPX or 418 in the SPYs, when the ADMA hasn't fully caught up yet, there's still some elevation there. I don't want to see us fully negate on a closing basis the actual breakout candle, that ignition bar. That oftentimes can represent a problem. Everyone who was short and got squeezed out of the market on that day is inclined to potentially reshort, and potentially even worse, anyone that bought on this day is now out of the money and they might have to sell. So I really did not want to see it close below 1467, and we closed pretty much right there. Right now we're 20 cents below that. I guess actually we're up a little bit here after hours. The close is weaker, and now we're up a little bit after hours. We closed down at 1409. So regardless, we closed below that low. It's not great, but really the bullish side of the argument that you could make is, hey, at this point it's still just a little bit of a technical price correction. We just pulled back into equilibrium. So not necessarily the end of the world, but you certainly, if you're trying to have a bullish twist on this SPY close, which is hard to have with the negation of the breakout candle, you can't have us have a down day again tomorrow. Another down day again tomorrow, and we're really holding below 4,200. It's starting to confirm itself a little bit more as a failed breakout. If you look at the Qs look fine. They're still above the low of that day, which wasn't even really a breakout day for the Qs. It was just another day of continuation. But they're still above the low from the 18th. They didn't even really fully touch the ADMA on the daily chart yet. This just looks like normal, healthy price action once again. And the IWM is interesting. On the one hand, the Russell was still relatively strong today. Again, that's exactly what I want to see. Right now, the IWM is down about 0.5%. The Qs are down 1.25%. So the IWM relatively strong compared to the Qs. The Russell was leading again this morning. The Russell, and this is potentially actually the bad part, the Russell, the IWM here, gave us a break above that 180. How long have I been talking about 180 in the IWM? The space between like really 178 and 180. I've been talking about it for months, about how important that level is. This morning, we had relative strength in all of the areas that we were looking for relative strength this morning, right? We were still looking for further rotation into XLF, XLE, KRE, maybe some of those growth stocks a little bit. That's really what we wanted to see this morning, and we were getting it. We were getting it. The IWM was leading. The right sectors were leading. The right sectors were resting, which was more of those big tech QQQ type of names were resting. If you are bullish on this market, the early morning price action today is exactly what you want to see. Look at this strength from the Russell compared to, Qs couldn't really do anything, kind of going sideways all day. SPYs couldn't really do anything, kind of going sideways all day. But the breadth for like a down day for the S&P, like when the S&P was negative on the day but hadn't broken down yet at like noon, I bet that the breadth was actually really a good number without actually seeing what that number was. I bet it was really good considering that you were looking at a negative S&P. That there was probably a lot of stocks out there that were trading well, that were green, a lot of sectors that were trading well in green, and the S&P was a little bit weaker. Obviously, market cap weighted RSP was stronger than SPY for a good portion of today. This was really everything that you wanted to see, and then we really started rolling over in the afternoon. We started getting whacked with a bunch of negative headlines from the politicians that are out there who... tell you, again, I try very, very hard because I don't think it serves us any good when we're focused on making money here to not, give political views or talk about Democrats or Republicans and all that stuff. But these guys had better not go on vacation over Memorial Day weekend if they haven't figured this out. That's all I got to say. You guys better lock yourselves in a room and figure this thing out and not think that you can go on your 3-day weekend vacation. And if you want to go on a 3-day weekend vacation, you're a politician, get it done before the weekend because it's just ridiculous. But stalling, on the chatter of the debt ceiling is what really rolled us over this afternoon and led to a pretty bad close. So it's like on the one hand, I'm looking at the IWM that still actually gave really good relative strength. You look at some of these sectors, I guess actually XLF got kind of smoked, but KRE is still up 0.75% today. XLE is still up 1.1% today. Don't disconnect me. Wait till 5 o'clock. We still got some relative strength in the sectors that we wanted relative strength in based on this morning's meeting. We still got relative strength in the IWM, but you look at the daily candle on the IWM is gross. We got a break above 180, which is a key level, and then we closed at lows with a shooting star candle with a break above resistance in that shooting star. Usually that's not good. Usually, technically, that's a topping signal. I don't want to overread, I don't want to overread candlestick analysis within consolidations. I find that candlestick analysis, reading different types of dojis and reading Maribosi candlesticks and trying to, put meaning behind them within consolidations is usually not a great thing to do because there's a lot of false signals within consolidations. It's the inherent nature of a consolidation. Closing price action can a lot of times be a lot more haphazard within ranges. So that's why, even when we're talking about inside candles, when you're looking at an inside candle within a consolidation, it's somewhat useless. It's somewhat meaningless because, it's just consolidation within consolidation. But you're looking at such a key level like IWM 180 and you get a break above it and then you get a close at lows, it's really not good. Maybe the opposite side that a bull would want to make on this argument is we still had some improving breadth today, you still had relative strength from the IWM, and that this was more of a macro news event that actually caused the market to roll back over, and if that macro news event gets resolved, then the market could potentially get right back to where it was and give continuation. With that said, I had typed into the chat at one point, I've heard this from actually a couple of resources now, chatter about the debt ceiling kind of being a lose-lose situation. Obviously, if they don't get it done and we default on our debt, that's the ultimate lose part of the lose-lose situation. I think that the market gets absolutely destroyed if there's no deal getting done and all of a sudden we're not paying our bills. I still don't think that's going to happen, to be honest. I just think that these politicians are playing the games that we've seen them play many times in the past, and eventually something happens. But I've also seen that, even if when they get the deal done, that the Treasury refilling its coffers and adding on more Treasury debt into the marketplace actually could serve to suck liquidity out of the equity market, which also would just have bearish market dynamics, basically. So potentially looking at a lose-lose situation on that. Maybe it's a selling the news type of event, and that's the counter to the counter argument for if you're still trying to be bullish right now and saying, well, if we can just get the deal done, then this afternoon selling can just be negated because it was caused by the potential of no deal. So a lot up in the air. Obviously, we'll take that as it comes. The technicals after today, again, that's the big question. Is it a false breakout? If it's false breakout, you got a real problem, because false breakouts can often lead to pretty big moves in the other direction. Or is this just a technical correction still, and we haven't totally lost it yet? And I could definitely see an argument on both sides. I think that the price action over the next couple of days will help confirm. If we can get right back up there, if the market has an improving, fundamental landscape that's coming from the debt ceiling, and the market decides to uptick on that, fine. Then it becomes a technical correction. If we start spending the next couple of days down here or selling off even further, then it starts to confirm a false breakout. So we'll see. But the close in the IWM today is definitely no good. The close in the SPY today, I think, is no good also. I really wanted that close above that 414.67 or whatever it was. But the Qs are still okay. As far as individual names go, once again, pat on the back to the team here. Our ideas and call-outs have just been continuously on point for some period of time. The things that we were looking at today, as far as for rotation, all were working really well this morning. Whether you were involved in KRE in the beginning of the day, when this was giving further continuation, or if you took that Schwab off the open through this, versus 52, or through that 52 quarter area that we had discussed. Also a really good trade, or XBI in the beginning of the day. This was one of the first things that we saw the strength on. That strength was followed by that inside and up. Or if you're looking at these XLE names, XLE versus the 80 kind of area, the gap was a little bit big, so the first 10 minutes was a little bit tricky, but it created that pivot low, got back through 80. That was good. Or if you were looking at Chevron specifically, which is one that I was looking at and I had mentioned, Chevron off the open here, great. And even look at the pullback in the market in Chevron. You almost can't even see it. Chevron held in so well and is trying to break this descending channel that we were looking at. Bank of America was another one off the open that we talked about for right away off the open. Just another great trade there. Carvana, different universe of a stock, growth stock, but the inside and up in Carvana off the $10 base. Also worked great this morning. If you were able to get stock through like 11.75 or so on that level that we were looking at, and gave you a move to over $13. It just felt like every single name that we were looking at in the morning meeting worked great. So I hope traders were able to be involved. Again, unfortunately, if you were implementing an appropriate game plan for reward maximization and trimming and trailing, you probably gave back some P&L this afternoon. I know I gave back a real lot of P&L from my highs of the day to where we closed, though I still closed okay P&L wise. I know I gave a bunch back, so you may have also, and I think that's just fine. Can you guys hear me? Or did I actually get disconnected? Okay, cool. Cool. So yeah, so if you gave back some P&L in the afternoon session because you had a good game plan for reward maximization, I mean, that's all you can do. You know, you can never predict macro events or exactly when the market's going to turn. Anybody who thinks that they can, you know, consistently call absolute highs and absolute lows in the market, I think is probably a liar. So you just want to admit at a certain point that you don't know, that you can't predict price down to the penny with good enough of a consistency to say, all right, well, I was in Carvana and it's at $13.05. This is the top. I'm out. Really difficult to do that. So that's why we implement a trimming and trailing approach for game planning for reward maximization on especially stocks that are with trend and with momentum. And sometimes that means you inherently give back P&L, because the only way that you can make more P&L is if you're willing to give back some of what you've already made. And I'm a very big advocate of being greedy on your P&L when you're already in the money on stuff. So if you did that and you gave back some P&L in the afternoon like I did, I think it was the right thing to do, and all we can do is consistently do the right thing over time. So that's all I've got. I am happy to take a look at anything that you guys are looking at, any questions that anybody has, or anything at all. Looks like we got Palo Alto Networks up here after hours. Down ticked immediately, I think, but now it's up. What's that INTU doing? INTU's down. First thing I'm seeing question-wise, I'm not seeing anything in the VTF right now, but on YouTube, first thing from Chi, how do you have more conviction in the trade when the market is not participating, being the biggest layer of probability, but the name without catalyst is catching a bid? You can't. The way that I judge conviction, like how much conviction I'm going to have on a trade, is based off of the risk, reward, and probability of success. So if I'm looking at pieces of information that are going to tell me that I've got a lower probability of success, then I inherently have less conviction. So I think that's exactly the right thing to do, and then you create your game plan around that. And the second part of your question, what does your rule say about managing risk during some news like yesterday on the explosion on U.S. soil? What did your rule say when you were a beginner trader? Sure. So I spoke about it briefly in yesterday's afternoon meeting, but I can chat about it again today. Sure. So I spoke about it briefly. So I generally am a really big believer in the saying that I say all the time about trading, which is buy the ticket, take the ride. And that just comes from, like, I don't know if you like roller coasters. Don't be the person who just waited 3 hours online to get on that Six Flags ride, and then once you get to the front of the line, whip out and not get on the roller coaster. Buy the ticket, take the ride. I think that applies for trading. If you're in a position, I let my rules dictate getting in and out, and I'm a big believer in not changing your game plan on your trade after you're already in the trade. The game plan should be created prior to getting into the trade, or at the absolute worst, in the moment of entering the trade. But once you're in the trade, you've got your game plan, and I'm a big believer in not deviating from that game plan, no matter what the circumstances, really. Maybe if there's like a confirmed nuclear bomb that went off or something, I might kind of violate that rule. But generally, that's what I'm a big believer in. So when yesterday's situation occurred, I didn't hit out of any of my longs. I didn't adjust my stops on any of my longs. But I did fully hedge myself just about by short selling a whole bunch of TQQQ. I whacked the bid heavy on TQQQ to basically hedge out my entire portfolio just in case that piece of news was real. And it helped that I didn't hate where the market was yesterday to be able to short some Qs. I wouldn't have done it if that news didn't hit. But the news hit, and I'm like, all right, well, I'll keep all my stops in, but I'm going to whack all this TQQQ if this is real. And I don't know, North Korea just like tried to bomb the Pentagon, then and the whole market starts heavily selling. Well, then I'll be getting stopped out of my longs at a certain point, but I'll have this TQQQ that should be able to completely offset it. And it's almost like kind of just buying some insurance, and then when the news is fake, I actually ended up not really losing anything in that. Kind of worked my way out of the position because, like I said, I didn't actually hate the technical spot to have that T-triple-K short on to begin with. But if it's fake news, then you just, you know, lose your insurance that you put on. It just becomes an unfortunate thing, and I really think and really hope that someone is investigating what happened there, because it's not funny that happened, and it's especially not funny if it was somebody trying to be a market manipulator. I'm not saying that's what happened, I have no idea, but it's not out of the question that somebody wanted to get filled on the bid and you know, created that AI photo and got it out on Twitter somehow. From High Volume, also on YouTube, and I see some questions coming into the VTF. I'll get to those in a second. Asking me thoughts on an entry for AMD this morning. Yeah, AMD's tough because I think yesterday's the day to buy it. You know, yesterday when you're having that technical correction to the ADMA and you're looking for the pivot, that's where I prefer to be getting involved in it. Here you're kind of chasing day twos. I always struggle to chase those day twos. I think if you're getting involved in the second day after a big move, you just inherently have a worse risk reward and probability of success on your trades. So I wasn't closely watching AMD off the open. I certainly saw the chatter in the VTF when people were talking about how it was exploding. I think if I can remember correctly, but someone correct me if I'm wrong, we saw a lot of bullish option flow hitting in AMD right off the open also. I don't know. I would need a daily chart spot for me to have an entry in this AMD. It looks like it just opens and goes straight up. Maybe 108. Did it open below 108? Yeah, maybe 108's enough of a daily spot where you could try it there when you're seeing heavy volume and option flow coming in right away off the open. As just an example. But outside of that, I honestly see no way to be able to enter AMD here. Until maybe here, you could try buying this bull flag. I think Pat even called this pullback into the ADMA to see if momentum would come back into it. Again, I don't like where the daily chart is at this point to be taking that trade, and for me, the daily chart really dictates what I do, and the small time frame would dictate the entry. So I'm probably not going to take that trade because I don't like the spot on the daily, and the daily is telling me not to be involved. But you could have tried going long off of the 9:50 a.m. bar low, and I think that's what Pat called out to see if once this ADMA caught, you could get another leg of momentum here, which definitely could have happened, but didn't. Use 108.31. So you're just kind of looking at this little intraday resistance and pivot from yesterday. Yeah. I don't personally put too much on like previous day 5-minute pivots or 5-minute resistance areas, but it's certainly a way that you could do it if you like other things. And there was other things to like. The volume, the option flow, those are things to like. But the daily chart I think is tough for the entry, so for me that dictates not getting involved. Or short AMD on that 10 a.m. lower high inverse hammer candle here. Yeah. You could do that also. I have never been great at that trade. I certainly know the trade. I've never been great at it. But that lower high coming in is something you can take note of to try to short versus, and the candlestick analysis confirms it as well. My preference on the shorts is really more of those extensions. Like I shorted that Moderna at one point today, here, and all I was looking for was a move to the ADMA. I got it. Continued higher, but I was able to make money in it. But this is just that like extreme level of extension for this time of day. And we've spoken about this trade. This is a difficult trade. This is not the type of trade that I like for newer, more entry-level type of traders. I think it requires the ability to be a little bit loose with the stop loss, which I don't like for new traders to do. And to be able to have maybe a smaller position initially, potentially have it bleed against you a little bit as you look for the signal to be able to get heavier. So you got to be careful with it. And I never got heavy with it, which I could care less. I never got heavy with it. I made some money in it, and I got out of the way, and I got exactly what I was looking for. But I like kind of those extreme extension trades combined with time of day. So that's AMD. Back over to the VTF from Pam. How would you trade the XLE today through 80? Sure. So XLE, what was the opening price? It opened above it, 80.07. So one thing that you could do, and I don't love it in this situation, it's not really how I trade. I say trade anymore. When I was newer in my career, I used to do a little bit more of this than I do now. If 80 is important to you, and you see that it gapped above 80, and it's at $80.07, you could just buy it right at the open versus $80. Put in a stop at 80 or put in a stop at $79.99. I don't like that trade. It's got way too high a probability of a shakeout, which is exactly what happened here today. The flip side is that if you get opening momentum that comes in right away, which certainly happens, probably more in individual stocks than in ETFs. Like an individual stock with news would have a higher probability of this, and an individual stock with news, I like this trade much more than specifically trying to do it in an ETF. But if you bought $80.07 the second this thing opened, with the stop loss at $79.99, took 8 cents worth of risk, you can get a lot of stock. And if they just start ripping that thing higher, then you can have a lot of stock for potentially a really big move. And there's a decent probability off that 7 cents risk that you can at least get enough of a pop to be able to cover your risk. And then you're in a situation where it's like, well, if it fails or if it shakes out, not a big deal because I got my risk covered and is what it is. If it goes, awesome. I've got a lot of stock in, an expensive stock or an expensive ETF on very small risk, and I can make a lot. The problem is that there's a high probability of a shakeout of doing that. And this is also where you need to know yourself and you need to know the type of trader you are. But this point for myself, having been a prop trader with T3 for 13 years, my 13-month anniversary with T3 is next month. I know myself well enough to know that I struggle as a trader when I get stopped out of trades or ideas and I don't feel confident that the idea was wrong. I tend to churn, I tend to get back in haphazardly, I tend to bite stock. So what I've really learned about myself over the years, and the reason why I don't really trade like that anymore, the way that I'm describing, even though it's a valid approach, is that when I get shaken out, it tends to lead to me doing stupid things. It tends to lead to me exacerbating those losses beyond what they should be otherwise. So I really try to find stop losses where I know that the idea itself is going to be wrong, and not just that I'm getting shaken out of something that's tighter that I'm trying to scalp. So I'm not going to know if I buy 80.07 off the open and it down ticks to $79.99 and triggers my stop loss. That's not proving to me that the idea was wrong, because we know that if the ADMA has not caught your stop loss, there's a very high probability of a shakeout. If you have your stop loss above the ADMA on the time frame that you're looking at, if you've got your stop loss above the ADMA on the time frame that you're looking at for a long, the opposite applies for a short, you have a very high probability of a shakeout. So you are relying on pure momentum to actually pay you. And sometimes relying on pure momentum certainly can pay you. And when do you tend to see momentum? When there's volume or news. So if it's a news event, like I was saying before, if this XLE was an individual stock and it had news, if this XLE was an individual stock and it had, can anybody hear me or if this XLE was an individual stock and it had, can anybody hear me or some people can hear, some people can't, no charts. Alright, well I'm not changing the chart anyway for the moment, and so you guys can just look at your XLE chart. Well, I'm not changing the chart anyway for the moment, and I'll keep kind of talking here because your XLE chart. Thanks, Josh. So anyway, what I was saying here was thanks, Josh. So anyway, I'm trying to thought a little bit, but I don't feel confident having
Derrick
that stop
got
loss unless I'm taking a pure momentum news trade basically off the open. I don't like having that stop loss above the ADMA on that time frame. I don't like having that stop loss above the ADMA on that time frame. Somebody else is talking.
This is just IT.
YouTube is still running.
Still. Oh, that's good.
No, Noah can hear on YouTube.
Unfortunate
So
that I
if you're in
got
the
disconnected
VTF, if you
here.
just want
I
to
have to
click over
say
to the
though
YouTube,
that
that's
our
currently
servers
working
seem
just
to
fine.
be
Here's
good
the
health.
link. And I'm just going to carry on.
There's the link. There we go. Perfect. He's on top of it. Good health.
Cool.
It may have been a disconnect somewhere else, but we're going to be keeping an eye on that.
So anyway, I'm just going to repeat myself here a little bit because my thought process got interrupted a little bit. I'm just going to repeat myself here a little bit because if you take a trade off the open and your stop loss is above the ADMA and it's a long trade, you're relying on pure momentum to pay you. I don't like doing that because you can get shaken out of the trade and the idea itself could potentially still be right, but you got stopped out of the trade. I personally struggle with that. You have a better probability of doing that type of pure momentum trade if there is other confirming factors. If there is news, if there is volume. If I see that, then okay, I could feel a little bit more confident with that momentum trade, and I'm hoping, then okay, I could feel a little bit more confident with... Tell me if that's better if I'm not gonna, on YouTube. Oh man, I think that should have fixed it. I'm hoping. Cool. I'm hoping that when I'm doing that, the ADMA catches up to my stop loss because enough momentum comes and the ADMA actually catches up to my stop loss, and then that's good. Then that works. So otherwise, I could get shaken out of the position and not know if it works. All right, so I know I feel like I just said the same thing 7 times over and over and over again. I hope I got the point across. So when you're looking at this XLE, that's one way you could do it. It's not my preferred way. I might still buy some off the open, and honestly what I might do if I do that is I actually don't have a stop loss right away. And this goes back to actually what I was saying a little bit about Moderna, where I don't think that this is right for everybody, especially if you're a new trader. For people who are newer, more entry-level traders, I'm a very big advocate of immediately having a stop loss in for everything that you do. But like I said many times in the past, I have to kind of weigh back and forth here talking about what I think is the right thing to do for traders, or versus what I sometimes do, which might not always be the right thing. So I might buy a little bit off the open and not have a stop loss in. I want to put a stop loss in when the stock gives me a pivot and the ADMA is caught up to it. So that's probably what I'm going to do initially. You get a pivot on the second bar here at 79.85, but the ADMA doesn't catch up to that until like 2 bars later. So I'm probably not going to put, if I bought stock initially in XLE, and this is one way that I would do it, I would actually be light. I wouldn't have a lot of stock because I can't have a lot of stock without having a stop loss in. If I'm going to get very heavy in something, I have to, for me, I have to have that physical stop loss in. By 9:45, the ADMA catches up to that low, and whatever stock I have, my stop loss is going in. Ideally, I've added. So what I am ideally doing here is maybe I'm buying a little bit off the open. This is just the way that I would trade it. Not have a stop loss in. The pivot low comes in. On the third bar, when it trades back through 80, and this ADMA is starting to catch up, I take a bigger add through 80, and then I put my stop loss in for everything. And at that time or shortly thereafter, the ADMA is at that price. That's how I'm going to execute that trade. And then you get some continuation on it. So Pam, I hope that helps with your question. Apologies about stopping and starting and stopping and starting like 6 times and answering it. Next question here is from Ben. I know you have trailing rules because there's a whole video on them. Great. Do you have similar trimming rules, or is that entirely dependent on each individual trade? I would say it's entirely dependent on each individual trade, and that's going to be based on the game plan that I create for the trade before I enter it, and that's going to be based on how greedy I want to be. Generally, I will trail a higher percentage of my position and trim a lesser percentage of my position as my greed level goes up on the trade. My greed level goes up based on what the daily chart looks like, based on risk, reward, and probability of success, based on those layers of probability. So the more I like it, the more I'll trail, the less I'll trim as a general rule. And if it's a counter trend trade especially, that's when I'm going to be doing almost entirely trimming and almost no trailing. Like again in my Moderna short today, or my Palantir short today. Those were trades where I was going to 100% trim out of them, or my UPRO long. Those are all counter trend trades I took today. I shorted Palantir, I made some money, I shorted Moderna, I made some money. I went long UPRO, I made some money. Those are all counter trend trades. I personally think that those trades are more difficult and give you less reward potential than with trend trades. I prefer the with trend trades, but money's money. When you're taking a counter trend trade, you got to recognize that you have a significantly higher probability of being stopped out, so it just makes sense to trim significantly more of the position. Because anything that you're looking at trail, you're counting on a full reversal, and predicting and betting full reversals is very difficult. From Kyle. Kind of random question. I was just curious. Ever since you have been trading remotely consistently, did you notice any difference as opposed to being on the trading floor consistently in New York? Yeah, I trade much better remotely. I trade much better remotely. It's much less stressful. For me, this is the perfect system of we still have our group think, our communication, our sharing of trading ideas and information. That we could get on a physical floor because we have the virtual trading floor, but I can be focused. I don't have to deal with the chatter of nonsense that I used to have to sometimes deal. I mean, you guys don't know what it was like. You know, there was nothing like having like a brand new entry level person joining the trading floor, and if their second day on a demo account, and having that person tap you on the shoulder at 9:33 in the morning because their demo account's not working properly. And there have been times when I was a younger, more temperamental person where I may or may not have somewhat violently screamed at people for doing that exact same thing. I'm much more relaxed these days. Maybe part of the reason why I'm much more relaxed is I can look out the window and I can see these beautiful mountains in every direction. For me, this is the ultimate combination of peace of mind and focus with still having the team and communication environment. The only thing, literally the only thing I miss about the trading floor is happy hour after a really good day. Where now we're done with the work and it's whatever, 5:30, 6 o'clock, and we're all heading to the local bar for some drinks to, you know, build some camaraderie and do that whole thing. But I mean, honestly, the communication is so much better through the virtual trading floor than it was on the physical desk also. Because here, we're all in a centralized location, right? Well, we have, in the mornings, usually anywhere from like 120, 150 people in the virtual trading floor, somewhere around that. If you put 150 people on a physical floor, and we had a massive floor in the New York office, a lot gets lost in translation. You end up, you know, having one corner of the room talking about the VIX and one corner of the room talking about Apple, and the information is not getting shared in the same way as it is in the virtual trading floor. My only gripe sometimes with utilizing the virtual trading floor over the physical desk, I guess, is that not enough of you guys communicate as much as I would like here in the VTF during the day, to be honest. And that only hurts all of us. First and foremost, the person doesn't communicate. Because, again, if there's 120 people in here this morning, there's not 120 people communicating in this VTF. We all know that. It's generally a lot of the same people. And if you're a person who's kind of just watching in the background, you're hurting yourself, honestly. You hurt the team a little bit, but you hurt yourself even more. You know, I encourage everyone, don't be shy. And it's interesting because it's both some of the very best traders that are on the team actually never say anything, and also the entry-level people. A lot of entry-level people are just too shy for whatever reason to say anything. Especially for the entry-level people, you only hurt yourself. You will advance much more quickly in this business if you're not afraid to throw yourself out there. You have to have a little bit of thick skin in this business, especially if you're new. You might say something and I might hate all over your idea, but you're going to learn from it, and maybe I just saved you money because you didn't get into something that you would have otherwise. Don't be afraid to communicate. Guys, you can communicate any and everything basically into this room. You know, again, especially if you're a newer or struggling trader. If you're struggling and you're not actively communicating your trades and your entry and your exit points and your game plans for feedback in real time, you are only hurting yourself. You're only your own obstacle to your own success. And for the people who are really successful, I guess you can do whatever you want. But I would appreciate if you communicated more. And some of you guys do, and some of you guys don't. And that's fine either way. But we are all better off if everyone communicates. I understand it's difficult sometimes when you're executing trades to reach over and type into the chat. It's the same way for me. I'm sometimes on a phone call, trading, and trying to communicate in the VTF via chat all at the same time. I do that. And it's not easy, I get it, but everyone benefits. So that would be my only gripe with the VTF. But otherwise, I mean, this is it. This is so much better than the old way that we used to do things, in my opinion. So appreciate the question, Kyle. How do you game plan? So from Ben, I don't know if this is a follow-up on what I just said, or if this is a new question. I understand how you can do that for trades you game plan in the morning. How do you game plan all of this before entering a trade when an opportunity presents itself midday that you pounce on? Sure. So follow up from your first question. Sure. So I would say that I tend to, first of all, primarily trade things that I am game planning in pre-market. I have a much higher probability of trading something that I game plan pre-market than trading something on the fly. Trading things on the fly are more difficult because you didn't have the time to really digest all the information and necessarily create that game plan in the same way. Obviously, I do it. I had no game plan today to short Moderna or Palantir like I did as day trades. I had no game plan today to buy UPRO into a heavily selling market. I didn't know that the market was going to do that this morning. So I will take those trades. I tend to take those in the moment trades. It's not always this way. I tend to take those in the moment trades with much less risk than I do with trades that I've game planned pre-market. The reason for that is because my statistics show me that I do significantly better on trades that I've game planned pre-market. So that's it. For trades I do take randomly, have to create that game plan quickly on the fly. I have to create, what type of trade do I want this to be? What is an appropriate target? And what should the sizing actually be for me on that? So all those trades I took today as day trades, whether it was Palantir that I shorted here on this bar, or Moderna that I shorted on this bar, or UPRO that I bought on this bar, I had to ask myself, what are you looking for from this trade? And the answer was just an extension correction, an extension price correction. Okay, so that means I'm really just looking for a move to the ADMA. Okay, so how much stock is appropriate? How many dollars should I risk? And I'm doing this all really rapidly on the fly and executing that trade. But and how do I want that game plan to look like as far as trailing into that target? I would say at this point, because I've been trading for so long, I have almost preset game plans in my mind for these situations. I've seen this UPRO trade before. I've seen that Moderna trade before. I've seen that Palantir trade before. It's not the first time I've created a game plan for that trade. So it's almost like I got the preset game plan that's already in my mind, and I'm taking these preformed game plans and just applying it onto the situation, and that enables me to do it very rapidly. And that's why I say it all the time to you guys. Game planning is one of the most important parts about this business. Game planning is what creates consistency, and you want to become a master of your game plans. And for myself, I spent years, and I still sometimes do it, I spent years spending time when the market is closed, sitting down with a blank Excel spreadsheet and creating and game planning scenarios of trades, and then taking them and then applying them to those situations. And that's how I'm able to do it with those few counter trend day trades that I just kind of mentioned. Play with the numbers. It will benefit you tremendously. Sit there and play with the numbers. Well, in this situation, if I did this, what's the result going to look like? And if this situation I did this, what's the result going to look like? With trend trades versus counter trend trades. Take take a 1,000 share position on 20 cents risk for $200 worth of risk, as just a very basic example, and game plan it in seven different ways on 7 different ways that the trade could potentially work out, and see, you know, which ways give the highest amount of P&L, what works best in the long run, and kind of play with that stuff. And then at the end of the next week, based on some of those trades that you took during that week, be like, all right, well, you know, I took this Chevron trade this way. What if I took this Chevron trade this way? How would it affect it? And if you just can constantly play with these game plans, then you learn kind of which game plans can best maximize the situation that you find yourself in when you're putting the trade, because you've already played with it so many times. So that's definitely something I recommend. Cool. So looks like I got through all the questions. Sorry about the interruption in the VTF this afternoon, but it was our tech team putting that work in to hopefully ensure that we don't have any of the issues going forward that we've been dealing with the last couple of days, maybe even the last couple of weeks. So I hope everybody had a good day today. It was a great morning, afternoon. Probably gave back some P&L. I know I did. But if you did that, you probably means that you're doing the right things. So let's call it a day there. Have a great night, everybody. I'll see you all tomorrow.